All righty then. Welcome in, you trader nerds. Trading is a lonely endeavor. If you're out there by yourself, join us in this happy band of traders. We'd love to have you. Look in the description below for a link to a free 3-day pass to the Trader Nerds community, where you will find like-minded individuals who do the same thing that you do every day. Because you can't talk to Uncle Tommy about this at the Thanksgiving table, because nobody understands the pain, the passion, the reality of what it is to be a trader, for God's sakes. And yes, I am pumped up on sugar today because I have had 3 donuts. Hallelujah. Plus, I worked out with my trainer today, and I had 3 donuts because it is my youngest child's Gotcha Day. Now, for those of you who don't know what a Gotcha Day is, it is equally as important as a birthday. It is the day that we got her, the day that we adopted our little baby. So I had to go pick up donuts and to take to her class at school so they would know what a special day it is. And on the way home, I ate 3 donuts. So I am having a sugar rush, baby, like you ain't never believe. So welcome in. How are you? So got a lot of thoughts today. Let's see what the market's doing. Shall we? The market is up 0.16%. This is what we call an inside day. This is the day that you zero DTE people love because thank you, Glenn, because you can do iron condors on zero DTE today, and it should be just quite fine. It should be a nothing burger, right? So don't trust me on that. Just do it yourself. Let's look at our big green monster, see what we're getting over here. The expected move, first of all, is behaving nicely. It behaved nicely last week. I figure it will behave nicely this week before we have yet another gut-wrenching move, probably to the downside. Let's look at the big green monster, see how she's looking today. Hello, ladies. Look at this. We are having a little bit of issues. This is overbought, but now it's trying to be oversold. To me, though, we should have a little bit of resistance here, trying to get above this line. So I still am of the opinion that for the short term, we should be a bit bearish because it just wants to fill this gap. I know that it does. And indeed, the point of control moved to where we said the point of control would move. And I don't know. We'll see, though, if it goes up there. Let's look at our linear regression, shall we? Linear regression is here. I said linear regression is here. All right. That doesn't look good, does it? Just makes me so mad. Why ain't my darn thing showing? Where's all my stuff at? No, I don't want view only mode. I want, will you show me my stuff? The crap. What the crap? Where's my symbols? I don't know. Hold on. I know how to get it. What is that? Trading view. Here we go. This ought to get it. Let's see. Yeah, no crap. Hold on. Tradingview.com. This ought to do it. Products, charts, super charts. What's a super chart? There we go. That's what I wanted to see. We don't want XLF, though. We want to see the E-minis. Here's our E-minis. Look at them. Yes, so indeed. Is that E-minis? No, that's Eversource. Hard to say. That doesn't look right. ES. E-mini S&P 500 futures. There we go. So we're toward the top. I don't know. We may break up a little bit before we break down, but I still am kind of bearish for the next several days. We shall see. Doesn't really matter, does it? All right, let's go do what we do best, and that is count our profits, baby. Count our profits. And y'all, this ain't no Dunkin' Donuts donuts. These are homemade in this little bakery that we've got here. I can't even remember the name of it, but some Korean woman owns it, and man, does she know how to make her donut. I would say it's better than Krispy Kreme. If y'all don't have a Krispy Kreme nearby, what are y'all doing? Y'all are missing a lot of stuff. Let's see what our little thing looks like over here. It ain't going to show me my money. Show me my money, baby. How much money we got in the account? Here we go. What's my net lick? Dang it. Uh-oh, hold on. Got to log in over here. Change the password. It's a hard password. Oh, I hate changing passwords. That's why I like Regions Bank. Everybody's saying the Regions Banks are doing terrible. And I'm like, oh God, my bank is called Regions Bank. And I bank with them for what the crap? Less than 1%. Oh, be still. Must be the wrong count. No? Oh my God. What the hell?
It's the bank of the SEC.
It's the bank of the SEC, baby. Exactly. Is that your bank too?
No,
Do you know why? Do you know why I like Regions Bank? I like them because, y'all ready for this? They don't make you change your password every stinking 30 days like Synovus does.
I did work there before I moved to Kentucky.
You worked at a bank? Man,
Yeah.
that is cool, dude.
Multiple banks.
I don't think my credit was ever good enough to work at a bank. I think they looked at me and they said, oh my God, we don't want you
So
to.
they put you in the government.
So they put me in the government where anybody can work. Exactly, man. Exactly. So, you know how it is. All right, so let's say our account's doing. Good to hear your voice, man. It's almost football season in what? We got like 4 months, y'all. Football season will be here. And we pray that calamity befalls upon that stupid Georgia Bulldogs. What a heinous program. Have y'all seen Kirby Smart talk to his kids before the ball game? Oh, man, we're down a little bit. Why are we down? It says I'm up $8.61. All right. Anyway, he was cussing and was just talking terrible. Now, I know Nick Saban's got a potty mouth, but man, there was nothing like this Kirby Smart dude. I'm worried about the future of the Georgia Bulldogs under his direction. We'll see. All right, so let's move this over here. Y'all know I'm really worried about Georgia because I'm surrounded by Georgia Bulldog fans and they get on my nerves. 13-28. They say we're cocky. You don't even see nobody with a Georgia logo or anything till they do good, though. They're fair weather friends. 13-28. Y'all know I'm telling you the truth. 13-28. And I'm guessing the VIX is right around, still around 18 or so. Okay, so on the, what do you call, buying power 11,918. Now, y'all, we got to be careful here. Okay, y'all listen to me here. 11,918. Now is not the time to be taking excessive risk. Do you hear me? Now is not the time. Why? Let me show you. Let's look at our friend the VIX. The VIX has the back normalized, y'all. You see this? So what does this thing do? This thing continually does the same thing over and over again. It goes down, up, down, up, down, up, down. So what's coming? If little old Bobby was to look into the future, we've got an upswing coming. Now is not the time to bet the boat and the house on the future here. Okay, we're going to have another volatility spike. It's going to come. I am bearish on the market for the immediate next few days. The uptick is going to come. We just don't know when. Alabama spring game is not being televised, but Georgia's is. Yeah, listen, they got the Atlanta market. Big deal. We don't want ours televised. How about that? We don't want anybody to see ours. Unbelievable. So I am going to put on a trade, though, because my theta is light, but I am mindful of this. Now, I started thinking about it when I was driving home a while ago, and I said, Bobby, in this environment, would you be doing 111s or 112s? Knowing what I just told you, I'm thinking you probably should err on the caution of 112s. 111s when the volatility is high, 112 when the volatility is low. Makes sense to me. Does everybody understand why? I want to get further away from money. Now, inversely or conversely, you could say, well, Bobby, you got less notional value by doing 111, and you're true there. So there's give me's, get yous, and got yous on all these things. But what I'm going to do is I'm going to go out here to this 65 days, and I'm going to do me a long put vertical like I often do. I'm going to do it 50 points wide. I'm going to get it down to where it's $10, $9.75. Unbelievable. There's 975, right? So let's move that up to, no, not the quantity, Bob. Let's move this up to $10 and let us get filled. Da-da. And then I'm gonna do 112. Okay, Bob, what do you normally do then? Around $12 or so. So let's go down to the 35. Let's go down to that 3,500. A lot of liquidity there, right? And let's do a 112. And let's get her filled for 1275. I said let's get her filled for 1250. Y'all didn't hear me, did you? Replace the order. So I sent Beth to the school with the donuts. I said, make sure all the kids know what a got you day is. They already know. I said, don't. I said, you need to stand in front of them and tell them what a got you day is. Unbelievable. All right, so there's our 112, y'all. Ta-da! Done. Ain't got to worry about it till no more tomorrow. All right, so let's go to the next account, which will be the IRA. The IRA is this one. This one. Let's go over here, and here we are at 84,020. 84,020. Oh, yeah. This is what I like. Look at this. 84,020. Fire up the band, Roger.
Well, we're moving on now to the side, to a deluxe apartment in the sky.
Speaking of deluxe apartments in the sky, have y'all made your reservations yet to Atlanta? We're going to be there in May. We got a big thing going on. You better make it, because the 15th is our deadline to make your hotel reservation under that thing, or they're putting them back in the pool. All right, so our deltas are 73 minus 9. Oh my gosh, what is that? 64, 64, 75, 64, 75. See what that looks like. 64, 75. Okay. Oh no. Oh no. I'm at 0.09. Oh, but still my freaking little heart. Don't break my heart. My achy breaky heart. Oh, if I hear that song one more time. So 27,340. 27,340. Wow, look at that. Our buying power went down over here. Oh my gosh. 27,340, Bob. Here we go, 32%. So I'm a little light here. So let's do the same thing over here. I'm gonna do just a one contract. I'm close, right? Close to goodness. Let's do, and I don't like it because it's an up day, and I don't like it to put trades on, but we got to do stuff, y'all. We have to do this, or we're not going to have any theta. So let's go micros, and let's go city 6 days, city 6. And we said we were going to do 2 of the 30, what, 3,500s? 2 3,500s right here. We're going to try 1275. We won't get filled probably. I don't know. I believe I can fly. I believe I can touch the sky. See, when you have, see what happens when you have a little bit of faith? 1275, baby. Now we got to do our little, what do you call, other thing. And that was 3960, 3910. Have y'all seen that fat person like step on they're on the basketball court, and so they're trying to slam the ball and they jump on the trampoline, and then the next thing you know, they fall on the floor and they're playing that. I believe I can fly. Oh, that is the funniest thing. So 3960, we've already got a position there. That's fine. We'll buy where we bought, and we'll sell where we sold for $10. Yep. I said for 10. There we go. Now let's go put them in their groups. Everybody needs a group, whether you're a trader nerd or you're Alabama Crimson Tider. Oh, look at this. We got something coming up today. Okay, so these are my nakeds. Naked, naked, naked. And these are my put debit spreads. There you go, Bob. All right, so let's go put them in our spreadsheet, shall we? Let's go to trades and see if we got anything that needs managing. I don't see any auto close dates. Everything looks good. So we'll go over here and we'll go MES, MES. Everybody needs a group. Even the Bloods and the Crips. Everybody's got a group, even the Republicans and the Democrats. Everybody's got a group. And the media in our country wants you to believe that we all hate each other, but we don't. We don't. But if it bleeds, it leads. That's the way they are. And that's why they want us to hate each other. And we don't hate each other. We love each other. We just have differences of opinion. Nothing wrong with that. So 3,500 puts naked, 66 days, 4/11/23. And we got in that one for 1275 because I believed I could fly. All right. And then we did a 3960, 3910. And it's not that Alabama hates Georgia and Georgia hates Alabama. Why you love each other? I go to church with Georgia fans. We get along fine. Put debit spread, 66. But we do like ragging each other a little bit. 4/11/23. We got in that one for $10. Looky there. Looky. Here comes Cookie. Okay. So that's done. I said that's done. And then the tasty trade is done. So we got nothing else to do except our last little account. Let's go to him. Hey, little feller. Hey, little feller, what you doing? You come here all fun? Let's see if we're up and listening today. Listen. So in the Crimson account, what we got going on is we are at 35,193. 35,193. Fire up the Ben Rogers.
We're moving on now. To the east side. To a deluxe apartment in the sky.
Yes, hallelujah. Praise the Lord. All right, so we're 33 or 34 minus 2. So that's about 32, 38. For those of you keeping the delta theta ratio, 32, 38. I used to keep all those radios and I finally said, screw it. I can't keep up with it. And our buying power over here is at 10,479. Well, what do we have here, friends? We have the perfect account. That is gorgeous. Now, let's see how we're doing compared to the market. We are at 3% and the market's at 6.73. We are coming back. Now, here's where we have confession time for those of you that are Catholics. I'm a Baptist. We don't confess. We just make sure that we don't go drinking with our Methodist friends because they'll drink all the beer on the boat. You can't go with a Baptist friend because if you go with a Baptist friend, neither one of you can drink because they'll tell the rest of the Baptists. So for our Catholic friends out there, we are confessional time. I made several mistakes during the Volmageddon of March. What were my mistakes? Let's go through them, shall we? Now, we have a list in the trading plan of what to do if things go awry. If any of your trade metrics are violated, permission is granted subject to the trader's risk tolerance to adjust the portfolio by closing profitable positions, closing losing positions, closing the short put and the put debit spread, rolling losing positions to extend the trade duration, selling futures contracts to reduce your deltas and blah, 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 and your buying power, buying cheap protective ES puts to reduce the portfolio buying power, and selling 10 delta or less calls nearest to 60 days to expiration. Okay, here's what old Bobby did wrong. I closed losing positions that I should not have closed. So what my thought process is this, ladies and gentlemen. I should develop a listing of these in order of what I would do if crap hits the fan. Okay, I made a mistake. I think my first thing is going to be, if I want things reduced and I need it done, is going to be this. So I'm going to put this now first. Is that okay with everybody? So I'm going to copy that, and then I'm going to hit that, and then I'm going to go, probably my first go-to is that. Okay, selling the future. Okay. Second thing that I probably do, and this is a close second, I think rolling losing positions to extend trade duration, I think that is it. And when do we roll? I'm rolling now at a 30 delta. Okay, so I don't need to put 30 delta in there. I just know that. And that if the 30 delta is done, but otherwise, I'm not sure that I need to do anything. Okay, so let's see what else we could do here. Okay, so then maybe my third thing is close profitable positions, close losing positions. This is something I would rarely do. Close the short put and the put debit spread. I would probably put that last. I would definitely say I would buy a cheap put before I would do that. So let's cut this one out. Cut. And let's say, yeah, I would, that's probably the last thing I'd do is right here. So, and it'd be a toss up. Let's see, is that right? Yeah. So it would probably be a toss up in the last one, whether I would close a short put and a put debit spread, or I'd sell a 10 delta or less call. You know, I'd probably sell a call before I do the debit spread. So why don't I do this? Why don't I cut this? Cut.
Hey, Bobby.
Yeah.
So just thinking out loud here, I personally would say that the selling of the call would kind of be your first line of defense. Because if you sell one futures contract, that's going to give you negative 50 delta.
Yeah.
If you sell one 10 delta call, it's going to give you a 10 delta adjustment. So your only way to really make meaningful adjustments with the calls would be to sell huge amounts of them.
Mm-hmm.
And we know that you don't really want to be selling calls on a big move down, right?
Right.
The odds of prices kind of whipping back and, pressuring those calls is a lot higher.
Mm-hmm. So you think that the
curious what your thoughts are on that, but from
so you're
my
saying
point of view,
selling calls should maybe be one of the first things we do.
yeah, if you're looking for a smaller adjustment, I feel like if we're in this like Volmageddon markets crashing kind of environment, selling calls isn't going to do a whole lot for you.
So you're saying selling calls is not going to do a lot, man. So why would I move it toward the top then?
Because it's a smaller adjustment. It's a less extreme solution to the problem, is the way I look at it, at least. I'm hoping somebody jumps in here and points out something I'm missing. But if the market's down far enough that we have to start selling futures and everything's all out of whack, we're going to be selling calls on a 2 or 3% down day, and we're going to have to sell a lot of them, which I feel like puts on more risk versus taking it off.
Okay, I've heard from the devil. I mean, from the angel. Let me hear from the devil. Ed.
Hey, Bob. Hey, Evan, everyone.
Hey, Ed.
Can you hear me?
Yeah, hear you good.
Oh, good. I'm in the car. Okay. So I'm hearing what Evan's saying. I tend to agree with Evan and what he's saying. I think what Evan's saying is if we need an adjustment, first, I think maybe you should roll your 30 delta. That should be if you have any 30 deltas, roll. Regarding this futures versus call, I think what Evan's saying is it's a marginal step to sell a call versus the future is a bigger hammer than the call is for an adjustment. Is that kind of what you're saying, Evan?
Yeah, 100%. Because if you sell one call, it only does 1/5 of what selling the future would do.
Yeah. So I'm guessing, Evan, in a where you're starting to feel some portfolio stress, you would sell a call, and if there's more stress, you might sell another call. And if there's more stress at that point, you might sell a future and buy your calls back. Is that kind of maybe a possibility?
It could be, yeah. The way I'm treating it is this: if your current portfolio delta is less than your maximum delta, I'm just using calls to adjust. And if it's greater than that maximum delta, then I would use futures, because you need a more dramatic adjustment at that point. But I think the futures, like you said, roll first, sell calls, close winning positions. All of that makes sense to me before selling the future. I think the future is, like, in my mind, a last line of defense.
Right, but shouldn't we consider selling the profitable positions maybe first? Because like then you might not need to do anything else. The market doesn't continue to tank.
I like that. I mean, if you can, if there's something that's profitable, you can, that should definitely be the first line of defense. I agree with that. If you can, right? I like that.
Or even a
And I was
break
gonna
even
say-
position.
Or break
Oh,
even. Yeah. If something, you know, for a scratch or, closing profitable positions or at a scratch. Absolutely. I think where I made the position is, this is what really hurt me. So I think it's good to have debate on where these can go. And I guess it could be different depending on the situation too, right? How big of a move against us have we had? But where I made the mistake was, the first thing that I kind of went to was closing losing positions, and there was no reason to close them. So what I wanted to make sure is that I put in the plan that closing losing positions is kind of one of the last things that we would do. You know, I don't think there was a reason to do it this last go around. Now,
I would agree
hindsight
with that. I mean, you're-
is 50-50, as Pat Dye tells us from Auburn. But yeah, go ahead, Evan.
I was just to say, I would agree with that. None of your metrics were in that much trouble.
Yeah.
I don't think they were in that much trouble to warrant closing losing positions. If anything, you could roll. But
Yeah.
to just outright close, I don't think we needed to do that.
I think, yeah, if you can close something that's profitable to get things back in order, that's definitely where you go first. I agree with that. I think Ed is kind of right, though. The rolling. So this kind of takes us to something new, though, y'all. If you're putting rolling as one of the top things you would do, then there's no need to roll unless it becomes a 30 delta.
I would still, I don't know, I feel like hedging. It's weird because I think that your portfolio could be way out of whack before you hit 30 delta positions. So it seems kind of extreme to me to let your portfolio be, double or triple the deltas that it should be, or 10 or 20% more buying power just because you're not at a point of rolling yet.
And
I
I
feel like
agree
there
with
should be
that.
kind of an intermediate step, right? Like you see things are starting to slide. So you're like, oh, I need to adjust my delta. I need to adjust my buying power, but I maybe don't need to roll those positions yet.
Yeah. And I think it depends. And so why I'm moving these or changing these in the trading plan, I'm not going to say, I'm not even going to put in here in order of preference. I'm not even going to say that. It's just that I want to see the things up top that I would resort to first. And these things at the bottom are, so these three here could be interchangeable, or these two could be interchangeable depending on the situation, right? It's a situational thing. But these at the bottom are definitely the last resort, I think. So selling 10 delta call here, selling 10 delta call here. I'm not going to rank these 1, 2, 3, 4, 5, 6, 7. I think I'm just going to say, look, if I can, and I kind of know that this is the best thing I could do. If I can close something profitable, get me back in line, do that. If I can, roll to do it or sell a call, these could be interchangeable depending on the situation. Selling futures, I don't want to be as quick on the draw to do that. Because the reason that we have all of these guidelines, y'all, is so that we can let buying power get up to 80%. That's why we cap it at 30%, so that we can hold the positions if crap hits the fan. So I kind of like that. Would anybody change anything else? I'm open to considerations. I'm telling you, I'm not saying in my plan that I'm ranking them. It's just that I kind of know in the back of my head, I would lean toward those things at the top. I would not lean toward those things at the bottom. I closed positions that had no business being closed. That's what I wanted to be. I want that to kind of be down at the bottom. And
Bob, I kind of missed, was dropping my wife off. I apologize. That's the subjective part. And you may have just said that. If you did, I apologize. But if you've got a position, like I try to take mine off at 90. Well, if I got one off at, if it's at 80 or 85 or wherever it is, and the market starts acting bizarre, and I want to take that thing off, I have permission to take it off. I don't think that's puking a position. I think puking a position is when you got your whole portfolio because you're afraid. And, you know, I'd have to go back and look at your metrics, but your buying power was very high, and everyone's portfolios at that point were kind of distorted, were they not, from the remnants of the TND, et cetera? So I think that might have had some to do with it also. But I agree strongly with Evan. You can't wait till everything's at 30% to defend your overall. I think that's a tranche management thing. That's a naked put management. It's not a portfolio management thing, because yeah, if you start waiting, you could have positions that are up 60, 70, 80, whatever percent, and you're just going to sit there and not do anything with the portfolio. It doesn't make sense. So it's very subjective, but I do think what Evan was saying earlier about the 10 delta call is the smallest little adjustment you can make first. And that's why I was saying, I think doing those, a few of those, and I haven't done it. I'm kind of like been studying Evan, and I see his logic and I see his portfolio and how it's set up. That makes sense to me. I'm still fighting the no call thing. I'm going to hedge with adjusting positions, and I don't really do a lot of heavy thought. If I feel the need to adjust, I'm going to adjust. I don't really care if I'm profitable, unprofitable, or what the delta is. So I'm kind of looking at my positions and deciding. Now, that's probably way too subjective. I do like the 30%. I mean, the 30 delta thing a lot. I just think that shorting a bunch of futures and not taking them off as quickly as possible. Future shorting probably should be the last thing because it's the most extreme. And I think I heard Evan say that somewhere along there. And you may have said it as well. I don't know. So I also like the removal of the, like, leave the put debit spread alone. I think if anything needs to be messed with, just leave that alone and go do, like, go buy your long put if you want to, but leave the put debit spread alone. And I guess that's it. I'm sorry. If I'm repeating what you just said, I apologize. I just want to jump in. Like, I think people should be permissioned when they're way up on a naked and the market starts going into a clear volume expansion weirdness. Like, I just think people should be able to, I hate to say subjectively, but get more subjective and less mechanical instead of just doing a deer in the headlights and saying, bye-bye, all you 70%, 80% profits. I'm not going to adjust you because you're not at 90% where I'm supposed to take you off. And you haven't gone to a 30 delta yet, which means a big loser. So it leaves a big swath of your potential portfolio and profit in jeopardy. And your plan, not your plan, the plan doesn't call for defense at that point. So does that make sense? I think some of these things are subjective and defend when needing defending. And then I want to go back to what I said at the beginning. I remember your buying power to be extremely high and your theta was pretty high as well during this last pullback. And I would say that although you puke positions and you're saying I shouldn't have, blah, 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 clearly your portfolio was in need of something because one or two more violent down days, and you really would have been, that's where I think the gamma starts to accelerate, when all your metrics are stretched. And then you get a further push down, the VAMA, the acceleration of Vega, which is VAMA, right? So the VAMA is accelerated. The acceleration of everything picks up when the portfolio is in a more distressed state. So whether you puke positions or put on futures, if I recall, you'd already put on futures, you already had some long puts. I'm not so sure puking your positions wasn't a correct move. We'd have to almost pull them up and really drill down and look, because you're saying that, I think, as a hindsight call.
It is.
And
Yes, I am.
Many people might be sitting there thinking, well, you know, hell, if Bobby did it, I'd probably puke positions too. And yeah, maybe positions were puked, but at that point, I'll go back to what I've said before. At that point, you're not in profit-making mode. You're in portfolio protection mode, which almost by definition means you may be losing some money when you make trades if and when the market recovers, but at least you're stopping yourself from an accelerating decline in your net lick at that point in time. That's what I'm really trying to say here. So I hope that made sense.
So I was short futures, and even so, my buying power only got up to 60%, Ed. So it wasn't like, I don't know, if I hadn't had futures on, what would my buying power have been? Yeah, and you're right. This is the benefit of looking, at hindsight. We know what happened. It was a non-event. So it's easy to beat ourselves up and say we shouldn't have puked positions. But what if the market would have been tanked along with the increased volatility? Would we have been in a lot worse shape had we not puked the positions?
That's exactly what I'm saying.
Yeah.
So I think it's subjective as to what puking a position means, because, you may have broken a rule, or you may not have been permissioned to do what you did. And maybe I'm not a disciplined enough trader. I'll fully admit that. But if I get in distress mode, and Evan and I have talked about this, strategizing, and what about this, what about that? And we've both kind of had lengthy discussions and pretty much made it clear, if we're in portfolio distress, we give ourselves permission basically to do anything as we sit in our chairs to protect our overall portfolio for the long run.
Mm-hmm.
So it may be a position we regret as we all look back in these prior blow-ups that are followed by recovery periods. Oh, I didn't have to adjust that. Oh, I ended up adjusting that, taking it off before I would have been at 90% on the other one. Oh, this, oh, that. And although those things are true, in a world of hurt, those are high-class problems, not, oh, my buying power is blowing up and I was down 8% and my metrics were all stretched. And I decided not to take off and not to adjust. And I was just going to ride it out because I've been through 12 of these before and they always recover. But that one brings you down 5 or 10 more percent. And all of a sudden you're 40% down or 50% down in your portfolio, and you're getting margin calls, and there's nothing you can do except the hard bail at that point. So I think my commentary, I welcome feedback on it, because again, this may just be me not being disciplined enough. I would invite other people to comment on what their imagination has told them they would do in these situations. I just don't know if, quote, puking positions should be so, and I've done it in the past. I'm not sure it shouldn't be something that we leave ourselves alone about, if you will. From a portfolio longevity standpoint. So comment on that, or someone else ask the angel what he thinks, or, I'd like to get other opinions on that.
Well, Ed, it's not like it was a horrible thing. My account is up at Bernie Madoff numbers after 3 months. I'm at 3.01%. I'm well in line with Bernie Madoff fake numbers. So it's not like it was a terrible thing.
And again, I know traders out there, some of them are, oh, my net lick's not recovered since before the volume explosion. I'm below where I was in early March. Bummer, bummer, bummer. Okay, it is a little bummer. Other people are like, oh, I'm above where I was in early March. I'm up 2% more than I was before the volume explosion. I'm to be celebrated. Well, what I'm saying is, I don't know if either one should be celebrated or punished, because one of them took a lot more risk by now being able to celebrate than the other one did by lessening the portfolio exposure at a moment of stress, but still leaving enough premium on to have an eventual recovery in the portfolio. So that as we sit here now, about a month since it began, and only maybe 10 days or so since it maybe, quote, stopped, I guess, since we don't know exactly when that was. You just have people sitting in different spots that made little decisions on the way. And in the long run, if someone goes through 10 of these or 50 of these, who's going to survive in the long run? Is it the person that maybe, quote, pukes some positions and lightens their theta and goes through a volume expansion period in a less stressed metric portfolio that, yes, will not recover as strongly as one that is more stressed? Is that person going to do better in the very long run? Or is the person who, yeah, I've done this before, I'm tough, I'm going to do it again, and blah, 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 and blah, blah, blah. And yeah, they've survived a million times, but you follow what I'm saying? Like one person is, and I don't know how to figure this out either. This is something else that I think about, like who is making the best call, not in this one blow up instance, but overall as a best practice. I don't know. I mean, ultimately, we're going to do the best we can when these moments arise. And I'm sure there were people that may or may not be listening now, but probably people that blew their account up in this volume explosion. And, you know, maybe because they got stubborn, I don't know, but I'd rather just be sticking around when the time, you know, like I'm in it for the long run. If I feel like I want to cut back positions because I feel like my portfolio is a little extended and it looks like we might be having some kind of volatility period, I don't think that should be out of the question. And one of your mentors, a fellow mentor who's probably listening right now, I think is using a volatility chart. And when volatility is falling, this person feels more comfortable selling naked, selling net premium than when vol is spiking. In fact, he is looking at when volatility turns and breaks a moving average to the upside, he's looking at lightening up right then and there on his positions. And that's not when things are stressed. That's when he's saying, hey, there's a potential for a vol explosion. I'm going to lighten up my positions, keep my portfolio running on lighter premium and wait and see. And if there's a huge vol explosion, I'm going to lay into a bunch of positions into it. In other words, they're taking maybe their whatever 2/3 or 3/4 portfolio and lowering it in anticipation of a further vol expansion, where they'll then lay on positions into that expansion, which we all know is the best time to put positions on, right? So again, there's a lot of fluidity and commentary and different mindsets going on here. And I don't know what the ultimate answer is. But as far as laying positions on, you know, doing it in a higher vol period is clearly a better time to do it. We all know that. So I'm going to hit the pause button again and let you jump back in. But there's just so many different things going on in different people's minds that I'm listening to and thinking about. And it's very hard to determine which ones are not. Some of them are clearly not valid. Others have serious merit and I think need to be examined further because they seem to make sense. All right.
Okay, good discussion. All right, so remember my new plan says ordinarily these things are closed when they get down to 21 days. So I've been just kind of taking one of these off a day. So let's go see which one is the highest percentage winner. So we've got one at 94%. I think Ed would even agree. Bobby, take that off. You made 94% on it. So let's close the 36.75. We're going to try it at $1.80 because we are greedy. Nothing. Cancel, replace, 85. And we're out at $1.85. That ain't bad. So let's go see how much we made on that. $1.85. And we got out of that at $4.11.23. Boom. So we made 93% after things. So we made $140 on that. Okay. So I've got two more of those to go. Now, what we need to do though, is we need to replace that, right? So, don't want to take away my data from that particular one. So let's go see if we can roll that out. And trade 66 days. Where you want to put it? Now that was the 30. What was that? The 30.
I think 36.75.
Now let's see where that's at. 36.75. That would be like a 111, right? Getting about $24 or so. I could easily go to that same strike. 11 delta. Why don't we do that? I kind of like that. Roll to the same strike, 36.75. Let's see if we can get 23.75. Nope. Yeah, there we go. 36.75 for 23.75. All right, let's go find that. 23.75. And we said that was the 36.75. We roll that little puppy out. And we'll call him naked put 33. Puts naked 66 days for 11.23. Now, keep in mind, I'm a little bit mindful of that we've got 13 naked positions and only 7 put debit spreads. We've got 20 contracts of naked positions and 13 put debit spreads. Seems to me that it would just make sense in this particular account to put on a put debit spread, especially it's an up day, a great day to put it on. So let's go to that 39.60, 39.10, 39.60, 39.10. Uh-oh, can't do that one because I don't want to sell where I've already bought, right? So let's see, let's go move it up this way, 39.70, 39.20 for 10.25. Let's see if we can get on that for 10.50. That'll be fine. 10.50. There we go. Give us a little protection there. So 39.70, 39.20. What do we get into that one for? 10.50. So one contract, EDS 33, 39.70, 39.20. Debit spread 66 for 11.23. Now let's see what happened to our Greeks and ratios. You want to? Let's see what happened to our, see what we did with everything. Let's put everything back in their little groupies. Come here, little feller. So here we got you going into the nakeds and you going into the put debit spreads. Okay. And let's take off the groups. So we are now at 36, say 34.40. 34.40. Oh yeah, that looks good. 34. We increased our deltas a little bit. 40 increased our theta a little bit, same percentage, and our buying power went to 10.542. Good, Bobby. Look at you, 10.542. That's beautiful. Look at there. 29.95%. Y'all, this is an account that is doing what an account needs to do. Now let's just let theta continue to decay.
Bobby, why don't you show the analysis tab on that one? Let's see the whale.
Okay. The whale doesn't look as good over here, y'all. On this particular thing, let's see. So P&L open, P&L, let's go to P&L day. And let's see what we got here. Glad to show the whale though. Hide simulations. Make sure we get everything correct. Uh-oh, we got to go to, well, I don't think I have anything. I don't need to show anything. Well, do you? I guess we need to show what the VIX has to do with this, right? So let me take out my T-bills real quick, like. Chunky, 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 monkey, chunky, monkey, chunky, chunky. Yep. So let's see, 4/11, that's the right day. All right, let's go see our little thing here. Let's go to 4 expirations. And we have 6 expirations, so it won't show all of our stuff, but we can get a kind of a feel for it, right? I said we can get kind of a feel for it. There we go. So, you know, not much of a whale here. It doesn't show it as good, right, as it does in Tastyworks. 245 down there was 5% down, 453 here. 242 down there. Doesn't look like a whale at all, does it?
Bobby, if you grab the price or your P&L, you should be able to zoom it in. I think it looks so flat because you're looking at go the other way.
Other way?
Yeah, so weird. Maybe you need there we go. So yeah, if you keep zooming in that way, the issue is the far left of your P&L curve was all the way down at like 3,500 or so. So it was trying to fit it all onto the screen.
Okay. Yeah, that
Tasty
doesn't
kind of
look-
does the same thing. They try to, it depends on how zoomed in you are. If you're really zoomed out, it just looks like a flat line until you hit your naked puts and then it drops off.
Mhm. Okay, so I got a little bit
Maybe
of
a little better.
little better, right? It doesn't look as good as what we see in Tasty that kind of shows it that way. But you know, I don't know. I don't know if, does it mean that I don't have the hump in the other account? I don't know. I don't know. All right, y'all, it is T-Bill Tuesday. So let's go see if we can buy some T-bills. You want to? Let's see, TD Ameritrade login. Let's log into this. Let's see, log in. And that looks good, I think. I got so many accounts, I can't keep up with. All right, so let's see. I think these are all connected. Okay, so Bobby Beth 203. So this is our IRA. So let's see what the spreadsheet says on it. Spreadsheet says, I think it says that I can buy 11 or so. So let's see. Over here, T-bills. No, only 8. Oh, that's because I only go to 50% on my IRA. So I can buy 8. So let's go buy 8 of those. So we'll go trade, fixed income, new stuff, CD treasuries, new issues, and treasury auctions, 0 to 1 year. And let's go put 4 of them in the 4-week and 4 of them in the 8-week. That's generally how I like doing them, splitting them out. So we'll go 4 here. Make sure we got enough money in there. It'll tell me if we don't. Place order. Okay. And trade, go fixed income, new issues again. CDs. 0 to 1 year. Let's buy 4 of these 8-weekers. I like how these things coming off all the time. And this is free money, in my opinion, y'all. Ed has shown us how to make free money. There we go. So now let's go to the other account, the Crimson account. Let's see if we got enough money in those to do that. Let's see, Crimson should say T-bills. We've got 6 of those. So let's do 3, 3. Crimson, Treasury. Did I do that in the right account a while ago? I think I did. Well, this will tell me if I didn't. It'll say you can't buy anymore over here, dude. Buy 3 there. Yeah, there we go. And then we will trade some more. CD new issues, and let's get our 8-week ones. 8 weeks. 3. Beautiful. And y'all, these add up. Look, let's just show you the ones that we've got open, what our money is year to date. Let's see. Let's go to our groups. I mean, this is making a difference, y'all. Look at this. $79 year to date. I mean, that's cutting out some of our commissions there, y'all. And this is just on the ones that are open, right? Not counting the ones that close. Let's look at the other account. Look at this, $200. So you got, $300 or so, and just the ones that are open there. That's really good. All right, any more comments today? If not, I will see y'all tomorrow.